Hello, it's the 31st of January and it is the second day of the FOMC meeting where they begin debating. Policymakers are talking about whether we're going to have more inflation, higher for longer, what they're going to do next and what they're going to talk about. There is absolutely zero chance, I think, that there is going to be a rate hike or cut today. It's going to be all about the comments. At the moment, the market is pricing in a 40% chance of a rate cut in March. And I have to say that no matter what's, anything else going on in the world in terms of wars or uncertainty, when the stock markets are at all-time highs and the economy is booming and there is no sign of weakness in the jobs market, the chance of the Fed cutting in March, I have to say, is much lower than 40%. There is no reason for them to do it. There is no signs of any stumbles or weakening, and they have said before that they would cut rates to keep the economy rolling. And at the moment, there's no need to do that. Why would you let your ammunition get wet when you don't need to? So it's going to be a big kind of zero, but it's all going to be about the comments and the forward guidance from the Fed today. It's also the last trading day of the month, which, as you all know, is my least favorite day of trading. The reason is that they're just, most funds are marked to market on the 30th, not the 31st or the second to last day of the month. It just kind of tends to be a little bit of a reversal day if we're going to see one. Although if you look back lately, the markets have tended to make it, stock markets at least, and FX has tended to make kind of lower or high around the kind of 5th or 6th day of the new month. So I think for today and, until the beginning of next week, until we get after the jobs report on Friday, it could be a little bit of a pullback given that we are at really kind of extreme new highs. We've already seen quite a big pullback in the NASDAQ, and tech stocks are a little bit weaker than other stocks at the moment, although the one kind of exception I would say is AI, which is still booming. So we've just had Microsoft earnings, and all of that was credited to being down to AI as well, or their outperformance was down to AI. And today we have got Boeing, which is going to be really interesting. And that, again, Boeing's done all right until all of these accidents. Now it's going to be about forward guidance from Boeing. And we've also got MasterCard. So there's quite a lot going on, but it's going to be funky just because it's the end of the month. So let's take a look at where we are and what we can do now. The dollar is back at the low of this trading range that we've been in. We have stalled here at the 200-day moving average. And fibs aside, we could see a little bit of a bigger pullback here because the bottom of our sideways range is really this daily 50 moving average, which is down at 102. And we're kind of doing this kind of sideways thing. We could, on the Fed, spike down here, and then I'm going to look, if we're still going up, I'm going to look for us to be bought up down here and snap back and close back above this 236 fib level at 103. But it is a really nasty, tricky range. So I would not be, again, surprised to see a spike. We've got a double top here on the top of this sideways range. And so a trip down to the bottom of this sideways range is where the support is going to be. And if we don't think it's going to break out and it's just a sideways range, we shouldn't close underneath here. But a close underneath this daily 50 moving average would say this whole rally, this whole three-wave rally in the dollar is done and we're in another leg lower. If we dip down here, get brought back up and close back above this pivot level here in the middle at 103 in the dollar index, I think we're still in this sideways range. This is a correction and we've still got another leg higher up here to 105. So that's how I'm looking at this. We can see the inverse going on here if we look at the dollar index, euro dollar, sorry. Nasty sideways range. We are potentially supported from this daily 200 moving average, but we're underneath the daily 50 and 20. So this again is a really nasty sideways range. This 1.086 level for me is a little bit of a 50% pivot level. That's the 50% retrace from the high we made last July to the low that we made in October when the Fed turned. So we're in that kind of sideways zone. I still feel that we are headed lower, and I'm still in this euro dollar in a sell rally mode, and I think that the better support for me in the fib pattern target is back at the lows we were made in December and 1.076. So so for me, when we get a Fed like this, I think that this quite often is an opportunity to sell rather than buy. And for me, this is looking a little bit like a pretty good place to sell it. Let's see what the Fed do with this then. So not bullish, and and we haven't, whilst we're underneath these moving averages like this, it's no man's land. I'm going to be bullish if we start getting back above them, but for me, I still think we are in sell rally. Dollar strength, and dollar strength points to corrections in quite a few other things. So we had a little bit of an announcement earlier today. The Fed announced, the US government announced less borrowing than the Treasury had previously forecast, and announced the supply for the next week, which really hasn't moved the market that much. It was in line with estimates, so it's not that dramatic. We had ADP employment, which was below estimates, but not kind of that far out of line. We had US wage data, which shows that inflation has eased slightly. It was 0.9 instead of 1.0. So it's really kind of no big news. It's all going to be about the Fed later today. Outside of America, though, there is stuff going on, and not just in the Middle East. So the China markets are still falling. There's a lot of consolidation going on in financial markets there, and that is quite a negative tone in Asia from there. But I have to say that the thing that's really got my attention much more than what's going on in China or the Middle East is the data in Europe, particularly Germany, is terrible. Germany has been really hurt by higher energy prices and inflation and everything that's going on. It's not good. So in the Eurozone. So, not a good reason to sell the euro right here, but we are looking for that setup. So that's where we are in the world. Let's take a look then at some of these charts that we are looking at that are interesting. So first off, I'm going to look at gold, because in gold we are also potentially in a sell setup. Let's look at this hourly chart and 4-hourly chart here, because in gold we made a textbook ABC rally. So let's take everything off here and see what I mean. So this is 3 equal swings. We know that when we do 3 equal swings, if we break back underneath the 61.8 level, which we could not do and which we tried to do on Tuesday, that was the low on Tuesday, then that's a bearish reversal. So the buyers were there and we didn't close underneath it. But if we tested again after the Fed today, so this then is key support here underneath 2032, that's a bearish reversal, says this correction is over. If we continue higher, my target is all the way up here at 20,069. So we've got a pretty nice clear sideways range going on in gold for a trade, and so holding above 2045, targets 2069 next, and this is our kind of which way next zone. I have to say that I'm leaning towards bearish, and I'm not expecting it to break higher, just because this kind of 3-wave pattern and 50% retrace for me is my favorite kind of setup. This so I'm looking for either a double top here or a slightly lower high, and this to continue lower in gold. Okay, let's take a look at some charts. First of all, before we take a quick peek at the crypto charts, if we take a look at where we are, we're in no man's land in the bonds. In the 10-year, we're in between the weekly 20 and 50 moving average. If we look at this on the daily, we're kind of sideways at the 200 moving average. Now, are we going to find resistance at the top of this channel and continue lower, or is this bullish and we're going to retest the highs? Very often in markets, and particularly in these bonds, you can see whenever we make a high and low, we either make a deep retrace or we retest it. So for example, here we had a double, triple top thing going on, and it's a bit like crypto in that we make a high, then a slightly higher high, here high, slightly higher high, and then reverse, here high, slightly higher high. Everything gets kind of retested or deep retraces. Here high, a rounded retest or an Adam and Eve. So we have an Adam spike and then this little rounded retest here. So in terms of, if this was a major high here at 113, then if we break out of this channel with these bunched up moving averages, that has got to be the first target, and only above it are we going to get excited about this bonds going high. And at the moment, when we draw this as a channel, and if we look at it on a lower time frame, this really is resistance for our 200 moving average. Third touch here, we're not quite there, let me just draw it. So a breakout of this channel would be bullish, and that's our first target. And then bonds are only going higher if we do that, and if we exceed this high, and then we've got a nice kind of swing long to talk about. So that's where we are with bonds. I've talked about gold. I'm going to talk about MicroStrategy and Coinbase, because when we come to Bitcoin, we will see that we're a little bit of resistance. And here, from this low, we bounce. This is the key decision level, and I think if Bitcoin goes higher, so will Coinbase and MicroStrategy. But we always know that when we're in a downtrend, previous highs are the key resistance, and that's kind of where we are here. And the daily 20 moving average also resistance, and this was where today we've got so far pretty nasty bearish reversal. If we're going to be bullish, what we'll do here around month end is we'll make a higher low, and we'll do one of those, you know, inverted head and shoulders patterns and have another go. But I think if we get underneath this fib, we're going to keep going. And this was just a bounce in a downtrend in Coinbase. And MicroStrategy, which is even closer linked to Bitcoin, same pattern. So here we are, daily 20 moving average. Resistance, previous swing high, resistance, potentially, and also with the bottom of this gap. Now, with gaps, remember, if you don't fill them pretty quickly in the first couple of days, they become support and resistance, and then you don't. For example, this gap here. This was not a gap fill trade. That gap became support and resistance, and if we continue left here, in fact, this gap continues to be, there's the bottom of this gap, continues to be support and resistance. So we can be bullish in MicroStrategy above this level here, and I'll come back and we'll have a look at where we are. It's not quite fib related, but we also need a really strong close and hold above this daily 20 moving average. Then we can move higher to the top of this range, which, no surprise, is the daily 50, and then above that, I think, yeah, we can talk about going up again. It looks pretty good because we will be above all of our daily moving averages, and we will be pulling that 20 higher with us and on our way for another swing higher. So that's kind of really what I want to see. And potentially, if we're going to keep going lower, we could see a nasty reversal here. So for the next 4 or 5 days into next week, I think that it wouldn't be a surprise to see some kind of funky consolidation and back and fill in any of these markets that we are following. So that's where we are with those. In stock indexes, as you know, I said the NASDAQ is reversed at a pretty nasty level. Now, if we look at the NASDAQ cash index, we are at a pretty interesting fib projection level here at 17,587. But if we look at the NASDAQ futures, you can see that we are retesting these highs, 17,700, perfectly. Now I've got my Heikin-Ash on. Let's go down to the daily, and you can see we're having a little bit of a pullback here. So you know how these fibs work, and you know how I feel about this 886 fib. As long, you know, if in the next few days, as long as we don't close underneath this 886 fib, we're going to say this probably isn't a bearish reversal here. And then if we do, you know, we're going to flip it around and see a bigger pullback. But this, you know, for me could just be a pullback before we continue higher. And again, it could take us a few days, and we've still got to get through the jobs numbers at the end of the week, which will become more important, because that now becomes one of the things that the Fed are looking at very closely to decide what to do in March. So quite a lot of these markets that we follow, for example, the DAX is having a little bit of a pullback. And where are we in the DAX? This is the DAX index, and we are exactly at previous highs at 17,000 in this DAX. So that means that if we're going to see a bigger ABC correction, or a little bit of a trickier start here, remember the data coming out of Germany, I cannot underestimate it, is not good. So if we're going to see another swing lower and a bigger three-wave correction, this 17,000 level is really resistance, and we'll see what happens here today and for the rest of this week. So although these are really strong bullish markets, we are at pretty critical levels as we head into the Fed today. So let's talk about Bitcoin. So in Bitcoin, as this is a daily chart of Bitcoin, so when we looked at Bitcoin and we said this bounce, we could go back, if we break out above here, which we did, we will go to this swing high and the top of this range, which is 50% of this whole drop, and that's where we are a little bit sideways. So you know the thing about if we bounce to the 50% level, very often that would mean a 50% pullback, which would give us a very nice inverted head and shoulders kind of bottoming pattern if Bitcoin is going to do that. If in fact though that this is just a bounce and we're going to, you know, what we could end up doing is something like this and we continue lower. So bit of a decision. Now what if we break above this 50% pivot level here in the middle? Does this mean we are in a new upswing? Well, you know, the thing about Bitcoin is it very rarely just makes a high without retesting it, or a low. Here we made a low, we retested it with a marginal new lower low next time, and we tend to do that at major highs and lows. High here, if we look back to October, we had a high, slightly higher high, that was the top. Here, when we look at the low that we made in the summer, we had a low in May, we retested it with a marginal new lower low in June. In fact, we even did a deep pullback, and then that was it, you know. So it wouldn't, so for me, I have to say that I wouldn't be surprised at all if Bitcoin goes up and retests these highs. Not only that, but if we retest these highs and we do like that marginal new kind of higher high Bitcoin thing, then just above this level is that 50,000. And I wouldn't be surprised if we saw some profit taking there. Now, holding above 50,000, that would be super bullish. So between 48,500 and 50,000, even if we get back up there, and you're long into it, you know, for me, I'm going to take a little bit of profit, I have to admit. I just think it's going to be one of those kind of zones. And you know, if it's not, I'm going to wait for a pullback and buy some more. It doesn't matter. So there are some big alts that are following Bitcoin that I think are looking pretty good for bounces at the moment. And I will cover them later today. I'm following the kind of bigger blue chips like BNB, ADA, Solana, Matic, Uni, Sushi, Avalanche. If there's anything you'd like me to look at after the Fed today, let me know and I will cover them tonight. But that's where we are with Bitcoin. Now the other thing for me for alts is all about ETH Bitcoin. So if we take a look at ETH Bitcoin, because for me this is quite a big good proxy for the altcoin market, and when this wedge consolidation, let's take some of this away. So we're in this consolidation, we've got a double bottom here, we had a slightly lower high here, and all of our moving averages are all bunched up here on the weekly. Now if I measure from this high to this low, then you can see, and I haven't there, get it right, I had a target a little bit lower at this equal measured move level, which is at 0.046. I thought that that was where we would probably find support, and we have not got there. So if we were to retest this low, make a marginal new low, and that's at 0.046, that for me would be super bullish, equal measured move. And I said, I know, whenever you do this pattern, your confirmation that you've reversed is a back test of this 61.8 level, because corrections usually are equal measured moves, or they quite often have the second swing only 61.8 in length of the first swing. And so this is where this could have been. And when you back test it, if you get above it, that means usually that the bottom is in. So we got firmly rejected there very sharply, and it's where the daily 50 moving average is. So above there, we are for sure going up, and I think that we could see our next kind of alt season swing. If we can do that, it's at 0.061. Underneath it, I'm afraid I still think we have a little bit lower, and I'm looking for a retest of these lows. At the moment, we're holding in the middle of the range, and it could get a very bit choppy. Don't diddle in the middle is a thing, and this is a thing. Yeah, we could go either way here in the middle, but for me, bigger picture, I do think we are headed lower, and 0.046 is where I am looking for ETH Bitcoin to find support, and I think that that would be very good for these altcoins. So in previous seasons, when Bitcoin has had a big bounce and then it retraces, we have seen the bigger altcoins go first, followed by the love spreading out into the smaller ones, and I wouldn't be surprised if that happens again. But again, just for the next few days into month end, I think it could be a bit funky, so be careful out there, trade carefully. Really good things are coming in this market. Keep your powder dry so you have the cash to take advantage of it.